If you are invested in banking stocks or you are thinking about buying into the sector, this quarter could be more important than you think. Credit growth is accelerating, earnings are expected to stay healthy, and some banks are pulling ahead of the pack. But there are also few warning signs investors shouldn't ignore. Hey, I am Samir Sawant, a research analyst at Mirae Asset Sharekhan. In next few minutes, we'll break down the key trends to watch in Q1FY2027, the biggest risks, and of course, the banking stock picks from this preview. Stay till the end because we'll reveal the 3 banks that stand out the most heading into the result season. Let's start with the big picture. The outlook for banking sector remains positive. The biggest driver is loan growth. According to RBI data, banking sector credit growth has accelerated to 17.7%, and for banks in our coverage, credit growth is expected to be around 17.3% year on year. That's being driven by strong demand from MSMEs, large industries, services, owing to higher working capital requirements and shift from capital market borrowing to bank funding. Private banks are expected to post loan growth of roughly 16.7% year on year, while PSU banks could be slightly ahead at 17.8%. However, private banks are expected to gain market share on a sequential basis. Deposits, however, are expected to grow more slowly at around 13.2% year on year. Now let's talk about margins. Net interest margins or NIMs are expected to remain broadly stable for most banks. The impact of earlier repo rate cut has largely been absorbed, but there is some pressure from sticky deposit costs and higher mix of lower yielding corporate loans. The good news is that earlier reduction in term deposit rates should help offset some of that pressure. As a result, large private banks and major PSU banks like SBI are expected to report margins that are largely flat. Some banks, including PNB and Federal Bank, may even see sequential improvement in margins. On earnings, the picture remains healthy. Profit after tax for our coverage universe is expected to grow by about 13.1% year on year. PSU banks are expected to lead with profit growth of around 18.6%, while private banks could deliver around 9.5% growth. Treasury income is also expected to improve quarter on quarter as GSEC yield has declined by over 20 basis points as West Asia tensions eased. At the same time, operating expenses are expected to stay under control. Now the risk factors. Asset quality is expected to remain broadly stable, but investors should closely watch management commentary on agriculture and MSME stress. There could be some seasonal stress in agriculture, especially in Kisan credit card portfolios. On the positive side, unsecured segments such as personal loans and credit cards are showing signs of normalization, and microfinance delinquencies have remained stable. Before we proceed, there is one thing I want to ask you. Which banking sector stock are you most bullish on right now? Let me know in the comments and tell me why. Looking at the individual banks, Axis Bank is expected to deliver 20% Y-on-Y profit growth, supported by strong corporate and SME lending. SBI continues to benefit from strong growth in SME, corporate and personal loans, while costs to remain under control. City Union Bank is expected to post healthy earnings growth backed by strong business momentum and stable operating metrics. Other notable expectations include HDFC Bank maintaining stable operations with loan growth improving to around 15.4%, while ICICI Bank is expected to report solid overall performance despite slight moderation in margins. So, what's the overall takeaway? The banking sector enters Q1 FY27 in a good shape. Credit growth is accelerating, margins are holding up better than feared, asset quality remains manageable, and earnings growth is expected to stay respectable. The key monitorables will be signs of stress in MSME and agriculture portfolios, along with management commentary on broader economic environment. And now for the stock picks. Our preferred banking picks are Axis Bank, City Union Bank, and SBI. These are the three names that stand out based on the combination of growth, earnings outlook, and overall operating performance heading into the quarter. For more research calls like this, join our official WhatsApp channel. Click on the link in the description. If you found this preview useful, make sure to like the video, subscribe to the channel, and stay tuned for detailed result breakdown as earnings season gets underway.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.